Morning, Seafried in Chicago with the grain markets. Right now, beans are up 10 cents in the September. Meal and oil is up. Corn's down about a half a cent in the September, up 3 cents in the July. Wheat's 19 cents higher in Chicago, 18 in KC, and 11 in Minneapolis. Stock market looks like it's going to open up a little lower. Dollar's a little bit lower. Crude's a little bit higher, and gold's a little bit higher. Wheat market strength linked to the Russian mutiny by the Wagner Group, and then they must have made a deal because they stopped heading towards Moscow, turned around, and went back to Ukraine. Again, the Wagner Group is the main fighting group that does all the dirty work for the Russians in Ukraine. Still not sure about the head of the Wagner Group, if there's a warrant out for his arrest and what he's going to do down the road. But one of the first cities that they did capture was a very important port for Russian wheat exports. So buyers like Egypt, Morocco, Algeria, the Eastern Africa, Southeast Asia, and now India are all kind of wondering at the confidence level of Russian wheat exports. Russia still continues to offer wheat well below world prices and continues to have a high percentage of the world trade. We also note from a weather standpoint that there were good rains in the Dakotas, Minnesota, northern Iowa, parts of Wisconsin and northern Illinois over the weekend. But south of Route 80, or in the southwest and central south areas, there was very little rain. The forecast last week, European model had late this week some good rains across the Midwest. Right now, the amounts and coverage of those rains are probably a little bit less today than they were on Friday. So the key in the corn market is, number one, how much corn will be pollinating in the dry area, and number two, what kind of yield do we need to go down to if demand is dropping off, especially on the export side. We're looking for relatively low export numbers for corn, beans, and wheat because of the competition, especially in corn and beans from Brazil. We also note that central banks globally are hawkish, and they continue to talk about raising rates, and especially in Europe, the higher rates could trigger a recession there. Here in the United States, most consumers are dealing with declining disposable income and problems in paying their bills. And so that could slow the demand for certain items, especially food and maybe automobiles and the housing industry. So we'll just kind of watch and see how closely higher rates here and globally slows down the economy and demand for commodities. Last week, managed funds were big buyers of 134,000 contracts in the grain room. That puts them long about 140,000 contracts from a net neutral position. So that's another key in grain flow. Do they want to hold those positions? Do they want to get out of those positions because of lower demand? Is there enough weather for them to add to those positions? So in general, we're looking for a little bit higher market today. We got a USDA report at the end of the week.